Good afternoon. Thanks for joining us today. We have Magna Terra presenting. Magna Terra trades on the Venture Exchange under the ticker MTT. With me, I have CEO Lou Lauric and Chief Geologist Dave Copeland. Before we get started, as always, this presentation will contain forward-looking statements. If you'd like to know more about those, you can find them on the presentation on the company's website. And there will be a Q&A section at the end, so feel free to input your Q&A box at the bottom. And with that out of the way, I'd like to introduce Lou Lauric to tell you a little bit about himself and the projects they have in Eastern Canada. Hey, Lou.
Thanks very much, Deb, and thanks for having us today.
Nice to see you again.
Yeah, you as well. Where would you like us to begin? Jump right into the presentation and give a little update on where we're at.
Yeah, for sure. I mean, I think it'd be good to give an overview of the story for anyone that's new, and then an update on what you've got going on this summer.
Well, before we start, maybe I'll give a little backdrop on the company and where we've come from and why we're here and focused in Atlantic Canada. Magna Terra is not a new company per se, but it's new in the sense that it's new to effectively opportunities in Atlantic Canada. We do have a portfolio of assets, exploration assets in the Patagonia region of Argentina, Santa Cruz province, that we have advanced but didn't get a whole lot of traction with because of the political risk in that country. So we did pivot last year in 2020, around about this time, late July, early August. We closed the transaction with Anaconda Mining Inc, who is effectively a sister company. I'm the founder of Anaconda, as a matter of fact, and have been everything from the CEO to the chairman to now a lead director and continue to be a major shareholder. So we completed an acquisition with Anaconda whereby we acquired a portfolio of exploration assets, advanced exploration assets in Atlantic Canada, and pivoted Magna Terra towards this burgeoning region of gold exploration. And it's gotten very, how would I say, very hot in Atlantic Canada, specifically Newfoundland, for example. But we've been there for almost 15 years and always have believed in the geology. And it's one of the reasons why we've effectively, with Magna Terra, have gone back. And we're quite excited about the potential of the portfolio that we have. And I think I might make mention, because I am asked this question quite a bit when giving these presentations, is why did Anaconda sell the portfolio? Well, in fact, Anaconda's been very successful in an acquisition they made in 2017 of a project called Goldboro in Nova Scotia, and have taken that asset, under both David and his colleague Paul McNeil's technical guidance, from about 700,000 ounce resource at that time to now, in an updated PEA just recently produced, to plus 2.7 million ounces in the measured, indicated, and inferred category. So all of the resources from the time that project was acquired went into advancing it, and effectively the balance of the exploration portfolio that Anaconda held, or good, the non-core portion of it that wasn't feeding the Newfoundland production operations, were kind of left idle. And that didn't mean they weren't good projects. It just mean the resources were being focused elsewhere. And that's why, effectively we did the transaction. As a team, we wanted to see these excellent assets advanced, and by putting them in Magna Terra, that's what's been done, and Anaconda retains significant upside as a significant shareholder. So it's been a win-win for both companies. So on that note, let's jump into the presentation, Dave, if you don't mind. So a little bit about our team. As I mentioned, I'm the founder of Anaconda, but I've also been involved with a number of other companies in the junior mining space, several several successful exits. My principal role is as a kind of the capital markets person, financing and forming these companies and moving them along, getting them financed, putting together the management and technical teams, and ensuring that they're in good hands going forward. We've got an experienced team of, probably I would say lean pretty heavily on the technical side, which I think is important for an exploration company, having effectively a deep technical team. And Dave, who's on the call with us, is effectively our chief geologist. He also retains that role with Anaconda. And his colleague Paul McNeil, they effectively develop and oversee our technical programs as they do with Anaconda. And it's probably a good opportunity for me to mention that we have a very good relationship with Anaconda. We share an office. We share, a management back office, and of course we share a technical team. And by doing so, we split costs over, effectively over the two companies. So again, it's a pretty useful relationship from that perspective. Next slide, Dave. Thank you. Just a quick little look at the capital structure. As I mentioned off the top, we effectively created Magna Terra 2.0 last August when we completed the transaction with Anaconda. Prior to completing the transaction, we rolled the company back on a 7-for-1 basis. I think it's important to make note of that, because there are no founders' shares in this company. There is no cheap stock. I'm the largest individual shareholder, and my average cost is much higher than where we did the financing last year at 20 cents per unit. So there's no promote, which I think is important. There's no cheap stock in the story. Anaconda received just under 12.5 million shares for the portfolio of projects. And then we did a financing at that same time concurrently and raised just shy of $5 million that we put to work right away in late summer, and went to work advancing the projects. And Dave will talk a little bit more about what we accomplished over the last year. We were quite busy on all three projects and continue to be. I mentioned I'm a large shareholder, fully diluted, hold about 15%. We have some key institutions and other strategic investors that represent about 20%. We would call them long or sticky shareholders, which a lot of them have invested with me in some of the other companies I've been involved with. So patient capital, which is important. There were warrants associated with the financing we did last year, 10 million strike of 30 cents. They have just over a year to run. This slide has to be updated in that sense. They've got about a year left on them. So currently our share price is around 13 cents, not 18 cents. There's been a little bit of a slip in the market. The gold tape's been a little tepid for most companies the last couple of weeks, but by any measure, the stock is very, very inexpensive. I hate to use the word cheap, inexpensive. I think there's a lot of value there, and we're gonna demonstrate that today in terms of this presentation. A cash position of just under $1 million, of which most of that is flow through. So we're still in a position to fund our programs here through to the end of the summer, but we will be looking to do some form of financing here in the not too distant future. Dave? Okay, why Atlantic Canada? For those that aren't familiar, the region is host to numerous large gold deposits, and the basis for this is this Appalachian trend. Major gold-bearing faults, structures where we see significant gold deposition, and some of the companies and projects that we can make mention of. Marathon Mining's Valentine Lake project, which is in Newfoundland, is 4 million ounces and counting. They're in development. Just financed last week. They just completed the debt portion of their project finance. Clarence Stream in New Brunswick, that belongs to a company called Galway Metals. 680,000 ounces is effectively the historic resource. They've made numerous discoveries over the last couple of years of drilling. They will have an updated resource sometime this fall, and it's every indication that it's going to be somewhere plus 2 million ounces. And really, the reason that this part of southern New Brunswick is now been declared a new significant gold district. And then, of course, I think the transaction that got all the eyeballs back on this region was the acquisition of the Moose River complex by St. Barbara Mining, the takeover of Atlantic Gold, a couple of years ago for $800 million. That I think crystallized the fact that there's opportunities here. And of course, I make mention as well of the Goldboro deposit, which is nearby Moose River and is owned by our sister company Anaconda, which they have taken from, as I said, 700,000 ounces at acquisition to now plus 2.7 million ounces in all categories. Other deposits within this significant district, all the way down to the Carolinas. Everybody is aware of how hot Newfoundland is with this seemingly major high-grade discovery that Newfound Gold has made, as well as other companies in the region. So it's become a place to be. But as I said off the top, we've always thought it was misunderstood and underexplored. This belt of rocks, or this it stretches all the way to Ireland, if you may, is somewhat, it's about 4 times longer than the whole Red Lake district. So there's no reason why there can't be more discoveries. I think it's early days in the geology in this region, in these 3 provinces. And they're all very favorable to mining and mining exploration. There's all the infrastructure you require. So ideal places to not only explore, but develop projects. Next. Thank you, Dave. I mentioned, when we talked about our market cap, inexpensive or very, very, very cheap. We have a company that is anchored with gold resources in the ground. I think that's something that most people don't recognize. We're not just call it an exploration company. The ounces we talk about aren't, call it, mineable at this stage. We need to add more ounces and maybe perhaps make additional discoveries in these projects. But the fact that we have 43-101 compliant ounces on 2 projects, I think, is a significant feature of the company from a value perspective. And currently, those ounces are valued effectively, at less than $20 an ounce in the ground, which is compared to our peer group, it's I hate to use the word, but it's kind of ridiculous. But that's the market we're in. We have 3 camp scale projects, one in Newfoundland. It's a combination of effectively 2 projects we call Great Northern and another project called Viking. We incorporate that all into one sort of project called Great Northern. And then we have 2 projects in this new gold district in southern New Brunswick, the Cape Spencer project, and then a very earlier stage project called Hawkins Love. Effectively our goal here is at one or all of these projects to add to the existing resources and make new discoveries such that we can be in a position to have 2 to 3 million ounces within 3 to 5 years. And Dave's going to tell us a little later on how we're going to do that. Next, thank you. I'm going to hand it over to Dave at this point to give you a little bit of a better taste technically about what we have. And first off, we're going to discuss Great Northern, which is, our camp or district scale package in Newfoundland. Dave.
Great, thanks a bunch, Lou. So as Lou said, we have large district scale projects. I'll start with Great Northern in Newfoundland and Viking, and what we see here, I think you'll see a similar theme through much of our projects, and that they're focused, along these major fault structures in both provinces, and both which show certainly good evidence for hosting existing mineralization, and a lot of potential to expand that mineralization and make new discoveries close to these deposits. The Great Northern Project is centered along the Deucers Valley Fault, this red dashed line down the middle of the map to the left. That's a 20-kilometer section of that fault. What we have is two blocks of properties, the Viking to the south and the Great Northern to the north. The Viking project is host to the Thor deposit, where we have about 83,000 ounces of historic resources in the indicated and inferred categories at an average grade of about 2 grams. And these are open pittable deposits. So Thor sits just adjacent to this Deucers Valley Fault within these older granitic rocks of the main river suite in the pink. To the north, on the Great Northern Project, we have 255,000 ounces in the 3 zones of the Rattling Brook deposit at about 1.5 grams grade. And again, these are all open pittable deposits that outcrop at surface. A lot of our focus since acquiring the project from Anaconda has been on the Jackson's Arm trend. So a lot of the work we did in 2020 and thus far in 2021 has been focused on this. This was an area of previously little exploration work that hadn't been drill tested. And we thought that was a really compelling target to make a near-term discovery. Overall, this geological domain is very similar and compares very well with Marathon's Valentine Lake trend. The key reason for that is that we have this large-scale fault system, and really that fault system bounds these older granitic rocks of the main river Pluton with these younger volcanic and sedimentary rocks. And as we'll see on the next slide, that's a very similar setting to Marathon. So here on the slide to the left, you can see Marathon's Valentine Lake project and the multiple deposits of that trend, the Leprechaun, the Sprite, the Marathon itself, and the Victory deposit that are sort of peppered along that Valentine Lake shear zone. Again, that shear zone separates older granitic rocks here in pink from younger sedimentary rocks here in the oranges and yellows to the south. So very similar scale and very similar geological environment to that project. Again, that hosts 4.2 million ounces. So really where we view our project is probably where Marathon were 4 or 5 years ago in terms of development and capital investment into exploration. And we believe that that Great Northern and Viking have the potential to host that scale of gold deposit. So I'll just zoom into Jackson's Arm, where we did a lot of our work this past year. Again, we have an older granitic rock in the pink to the south, separated from these younger sedimentary and volcanic rocks to the southwest here along this major fault zone. That fault zone is host to very altered rocks and gold-bearing rocks that we see in the orange through here. And also what you can see is the large soil anomaly with the bubble-colored circles here. These are all anomalous gold-bearing samples that we've collected over the last few years on the project. What we've outlined to date is a 2.4 kilometer long alteration zone. I'd say this is a minimum, and one of the reasons for that is we've discovered additional float to the north in this round, in the location where this red circle is, and you can see the picture of that mineralization here in the top right corner. So some really nice sulfide-bearing quartz vein zones, very similar to what we see down on the main Jackson's Arm trend. So So fairly exciting early term results from our work this year. Most of the work the past year, again, has gone into outlining this 2.4 kilometer long alteration zone, generating some really nice soil anomalies here to the south. That was a new soil trend that was outlined. And then a second one here just on the other side of Frenchman's Cove. So a lot of our work this year is going to go into drill testing those later this summer and early into the fall. You can see here, this is that large soil anomaly just in a bit of a simplified view. And that's what's got us quite excited here about the Jackson's Arm trend, is testing that larger anomaly. So last fall, we did complete a first phase drilling program, the first program on this area. We completed 9 holes, about 1,600 meters, so just a very early stage drill testing. Covered about 300 meters of that overall 2.4 kilometer long zone. What we saw was we really confirmed the extent of the broad alteration system that we see there. In places, it's up to 400 meters wide. Within the drill holes, we had quite large, broad alteration zones in the 20 to 40 meter range, with some weak mineralization throughout that alteration zone. Quite similar to what we saw on surface. And that was punctuated by higher grades of 4.67 grams over 0.5 meters and 3.84 over 0.5. So we're locally seeing grade. I think what we want to see going forward and what we're actively working on right now is just how to better vector into higher grade mineralization. And we think going to the southeast here along this fault structure is likely where we're going to find that. So that's really what we're going to focus on at Jackson's Arm this throughout the rest of the summer and this fall.
I just want to, just while we're there, Dave, just to point out that while we didn't get necessarily the grades and thicknesses we were looking for, we had broad zones of lower grade mineralization, which sort of gave us a real good indication that we're into some sort of a system, and it's just a matter of now, as Dave pointed out, vectoring into call it the sweet or juicier spots of that system. So we feel we're close, is I think the message that I would give people.
Yeah, right on. Thanks, Luke. Yeah, so work that we're completing currently, again, right on the other side of the valley, the Deucers Valley Fault here on that Great Northern project. You see the 3 zones here of the Rattling Brook deposit, the Apsey, the Road, and the Beaver Dam. So what we're focusing on is more work in this area, particularly south of Beaver Dam, where there was no soil sampling and prospecting completed prior to this. Recently, we've located some mineralized outcrop in this area. You can see the picture in the bottom left-hand corner. Again, some nice sulfide-bearing quartz vein in outcrop. So we're going to be really hitting this area hard with prospecting. Soil sampling that we've now completed is pending for this area, so we're just waiting on the results to come in for that, and we'll follow up on any anomalies that are generated from that effort. What we also see in this area is that most of the drill holes, you can see them here in these black dots, along with the resource areas as outlined in the red shapes here. There's not a lot of drilling that was completed historically outside of any of these zones. So there's a lot of open area and additional soil anomalies to test between these zones that form that resource. So lots of blue sky, lots of room to expand these resources going forward, and Magna Terra will focus on that probably more intensely through the fall here and into 2022. At southern New Brunswick, we have 2 large-scale projects. We have the Cape Spencer project here off to the east. It's located about 15 kilometers to the east of the city of St. John. And we also have the Hawkins Love project that's located about 40 kilometers to the west of St. John. Similar to what we see in Newfoundland, our projects in New Brunswick are centered around these large-scale crustal faults. Here in the case of Cape Spencer, the Milliken Lake Fault, which trends up through this area, just to the north of the claim block and transects the claim block. And then the Hawkins Love project is centered along this Wheaton Brook Back Bay Fault. Again, large crustal scale faults that transect this area. Hawkins Love is a grassroots project. It's of particular interest because it essentially, geologically, it's the mirror image of the Clarence Stream deposit that sits here just to the northwest. It sits on the opposite side of this larger intrusion, and I'll get into that in a little more detail as we go forward. But really, the mirror image geologically of that resource area, and certainly, there's been a lot of attention on that project recently with the success that Galway's had. I think they had some more really good numbers that came out the other day. So that's generated a lot of excitement within this corner of southwestern New Brunswick, and really highlighted its potential to host orogenic gold systems. At the Cape Spencer project, what we see is the project is centered along a 15-kilometer stretch of the Milliken Lake Fault. And very much similar to our Great Northern project, that fault bounds these older granitoid rocks and associated sediments. So the granitoids are in pink, the sediments are here in brown. And that really separates those from these younger sedimentary rocks in gray. So large-scale fault, separating older rocks from younger rocks, and in our mind, that's a great environment for these orogenic systems. What we see at Cape Spencer within the older rocks are multiple fault zones, and that's really what's host to the mineral resources in this area. And examples of that are the Cape Spencer open pit mine, this past producing mine that was really a large bulk sample in the 1980s. There we have 54,000 ounces at 1.71 grams in an open pitable resource. And then the nearby northeast zone, so just off to the northeast of the open pit is this zone. It's 96,000 ounces at 4.07 grams per ton in an inferred resource. So these are all NI 43-101 compliant resources that underpin the potential on these projects, and certainly some of the value that we see in these projects and the company. This project has essentially been dormant since 2005 before we acquired it via option agreement and staking a couple of years ago in advance of the transaction with Magna Terra. A lot of our focus early on and where we see a lot of the potential is on the Emilio trend. That's this 5-kilometer section of these older rocks where we see lots of historic sampling with high grade gold results up to 168 grams per ton here, and lots of visible gold occurrences. And that really attracted us, was the grade, the prevalence of visible gold either in outcrop and or float in this area. Additionally, this area really wasn't tested with drilling before. I think there was a total of 8 holes that, shallow holes that tested some of these occurrences before. Principal to that was right at the Emilio zone proper. That's where one of the drill holes, historic holes, had 7.86 grams per ton gold over 7.4 meters. So a nice result that really didn't have any follow-up. So a lot of our effort on this project last fall and through the winter has been on this Emilio trend. We did a systematic soil sampling over this 5-kilometer stretch and identified numerous soil anomalies along with historic data in these red sort of hatched areas. So lots of soil anomalies through this area to follow up on. Some of our prospecting returned assays up to 21.2 grams per ton gold with visible gold. I was in the field today with the crew, and we found some more gold within this area through here. And so, I'm reminded getting in the field of the potential of this area to host mineralization. We did do a small drilling program in the fall through this area. And what we were focusing on there principally was these subordinate structures, these north-northeast trending fault zones that come off of this main Milliken Lake fault. So these fault splays, and they're the ones that are hosting these higher grade veins and potential along those multiple structures. So lots of follow-up work to do there, lots of anomalies to follow up on through this summer and through the fall. So with that drill program, we completed 2,100 meters roughly in 17 holes. Again, following up on those float samples, 21.2 grams per ton gold here, and various other historic trenches through that area, and really focusing on these northeast structures and testing and following up on that Emilio zone, that 7.86 grams over 7.4 meters. So the results of our drilling, we had 8.8 grams over 0.5 meters. That's down dip of this Emilio zone hole. I'll show you that on cross section in one moment. And then 1.49 grams over 2 meters. What we hit in that hole was quite interesting. It was mineralization very reminiscent of the Cape Spencer open pit mineralization that we see there. But all in all, we tested this section of mineralized rock through here. It was about 1.2 kilometers of strike length that we tested with very broad space drilling, really just trying to sketch in some of the potential and understand some of the structures that host the mineralization there. We did successfully extend the Emilio zone off to the west about 250 meters between hole 8 and hole 13 in here. So for a preliminary drill program, lots of success on that in our mind. And I think one of the big things with that, this is a cross section here of the Emilio zone, but I think one of the big takeaways for this is that we really need to now focus on vectoring towards these thicker zones of mineralization, and we're working on better understanding that now and vectoring towards that. So just a cross section here looking east, you can see that 7.86 gram over 7.4 meters, that historic intercept there. 2 zones of mineralization that we've really defined via our own drilling and historic drilling. And there's that 8.8 grams over 0.5 meters down dip of that higher grade, thicker intercept. So lots to certainly it's open down dip and a long strike, but lots of potential for additional discovery at the Emilio zone. I'll just go over to Hawkins Love now, and again, Hawkins Love is a greenfields project for us, and again, it's the mirror image of that Clarence Stream deposit. So, and by that I really mean it sits on the boundary of this St. George batholith, this large pink granitoid body, and where you see mineralization at Clarence Stream is certainly along the margins between the St. George batholith and these these older volcanic and sedimentary rocks here in green. And we have those, they're the mascarene sediments and volcanics, and we basically sit on that margin. What's key to that mineralization are these large structures, as I mentioned earlier, the Sawyer Brook Fault in the case of Clarence Stream, where mineralization is hosted on fault splays off of that major structure. And that's really what we're targeting at Hawkins Love. So really at Hawkins Love, the property sits over this contact between these granitic rocks of the St. George batholith, here more particularly the Jake Lee Mountain granite. It's Devonian age, this pink body here, and the contact with these older mascarene mafic volcanic rocks and sediments in the browns, yellows, and greens. What we have is an 8-kilometer long soil anomaly from historic soil sampling that sits over that contact. And that's really what's driving our exploration model in this area. Coincident with that soil anomaly is that Back Bay Fault that transects up through the property and basically runs right down the center of the project like that. There are quartz vein boulders that have yet to be sourced with visible gold up to 302 grams per ton gold. So some indication that at least at the property scale, that there is potential to host high-grade mineralization. So part of our work at Hawkins Love right now, we've just completed a 3,500 meter soil sampling program that was really just designed to fill in and expand upon historic sampling that was done over this trend. We've done a round of preliminary sort of reconnaissance scale prospecting and geological mapping over that area. And we have a drone magnetic survey that's ongoing right now, about 600 line kilometers of drone mag. And we'll use that to really refine some of the structure and geological interpretation of the area. So, in essence, and kind of along that same theme, we have exploration programs right now that we're funded to undertake this summer. So at Great Northern, we've recently collected 2,650 soil samples along strike from the Jackson's Arm and Rattling Brook trends. That soil sampling program is complete, and assays are pending. We have follow-up mapping and prospecting, basically at all the targets on the Great Northern and Viking project. Particularly following up in and around the APSI zone and the Rattling Brook deposit. So assays are pending for that. We've got several samples in the lab. We're just waiting for the results to come back. And later this fall, late summer, early fall, we'll complete a minimum 2,000 meter drilling program, currently permitted for about 5,000 meters. At Cape Spencer, the plan is to collect 3,500 soil samples, primarily off to the northeast of the Emilio trend. We'll follow up on those on the soil anomalies that we do have, generating more targets throughout that Emilio trend. And we have drone magnetic survey also ongoing on the Cape Spencer project. So a lot of that is leading to a fall phase 2 drilling program to follow up on the results from earlier this year. At Hawkins Love, we just completed those 3,500 samples. Assays are pending for those. We have a drone magnetic survey that's currently ongoing, and mapping and prospecting program that's ongoing. That's that reconnaissance program that I mentioned earlier. So lots of news coming up. Lots of effort being undertaken this summer, really, to generate new targets for drilling this fall.
Thanks, Dave. So just to wrap up call it the formal presentation portion, I think it's evident, in terms of what Dave has just presented. I mean, we've had our foot on the gas here since we closed our financing, closed the transaction last summer, and been working all 3 projects. It's very, very seldom do you find a small company with 1, let alone 3, what I would call district scale opportunities. And we've been moving all 3 of them forward. So as I mentioned, we've got a deep technical team. We've had success in this region historically, not with Magna Terra, but with the same team at Anaconda. So we're well ingrained in the geology here. We'll have continuous news flow coming through the fall from all 3 projects. As Dave mentioned, we'll have at least 2 drill programs, one at Great Northern later this summer, early fall, and then a follow-up program at Cape Spencer later this year. We've got a lot of experience. We've got a proven team. We've had a number of exits in this business over the last 20 years. We manage our costs very frugally. We're lean at our corporate headquarters. And I think most importantly, we've got gold in the ground. There's not a whole lot of, of all the exciting juniors in Atlantic Canada, and there are a lot of exciting junior companies, there's very few that actually have gold in the ground. So that I think that's a very distinct advantage for us, and it's from a value perspective, I think it's important. And I reiterate, 3 significant district scale projects in a small company is unusual. So our view is it's not if we're going to be successful, it's when we're going to be successful. Our team is as experienced in this domain as there is in Atlantic Canada, and we just feel it's a matter of time and a matter of money in the ground before we make the next, as I say, the next big discovery in Atlantic Canada. So on that note, I'll turn it back to you, Deborah, and happy to answer questions from our viewers today.
Sure, yeah. Thanks for the presentation. I've got a couple questions from the audience, and anyone that wishes to input a question, feel free. So the first question is, what's your current spend on exploration activities as proportion to your entire capital expenditure? And what range do you expect it to be within for the next year?
Okay, well, that's an interesting question. So we raised $5 million last year, of which almost $3 million was flow through. We've spent about $2.2 million in flow through already, as well as the hard dollar amounts. We entered the year with some liabilities that we cleared, so that some of the hard dollar amounts went there. In terms of looking forward, we're budgeting for expenditures this year this year and into 2022, similar to what we spent last year, somewhere in the region of $2 to $2.5 million, and we will obviously accelerate those expenditures based on success at one or more of the projects.
Okay, great. Talking about management experience, how many ounces of gold has management found during their careers on a consolidated basis? Maybe you can walk us through some of the history of yourselves.
Sure. Well, I can only speak to myself. I haven't found any because I'm not a geologist. I've been involved with companies in a management and/or I call it founder/director's role. Where significant gold ounces have been delineated. In a support role, it's very difficult to take credit for discovering anything, but you're part of the process, because my biggest role in this company, as it has been in most companies I've been involved with, is making sure that there is capital to make those discoveries. So while I won't take credit for making any discoveries, I feel a part of all of them in the sense that I've assisted in raising the capital that's gone into the ground. So with that, Dave, you're the geologist. You've had this quite some time, and obviously been involved with the success that Anaconda's had at Goldboro and other things in your career.
Mm-hmm. Yeah, I mean, I've certainly been involved with numerous discoveries. I'll say it's the nature of the business that a lot of those discoveries end up being small. Sort of multiple deposits that are on the 100 to 150,000 ounce scale. Certainly, larger projects that I've been involved with where we've developed significant resources has been Rubicon in Red Lake. Their deposit there. I was part of that team that was associated with that in the late 90s, early 2000s. I spent time down at Hope Brook when we did the major resource expansion there, sort of mid, early 2010 through 2013. Certainly Anaconda's projects, I've been associated with those. We've really I think the big story there in terms of Point Roos is that we continue to find ore and continue to provide mill feed for that mill and keep that project going. And then, of course, there's Goldboro. We've grown that significantly over the years. In addition to gold, I've been associated with several base metal massive sulfide discoveries on the island that have grown to the resource stage.
I think Hope Brook recently got vended into, is it Big Ridge?
That's right. Yeah.
That's right. Yeah.
Mike Groski. There's just so many projects in Newfoundland and in Eastern Canada lately. I know, Lou, I shared with you last week a comps table that I loosely put together. I think there was 20 names on it, something like that. And you guys were the second cheapest just on a market cap basis. How do you think about that valuation, and how do you think about correcting it in terms of, like, a lot of these companies don't even have resources, some don't even have a drill hole. So how do you look at the OLA and where you're positioned right now and how to add value to that?
Well, first off, I mean, off the top, frustrating, but at the same time, it is what it is. And it's our job, my job in particular, to more clearly articulate the value proposition that Magna Terra is. I mean, with almost 500,000 ounces in defined resources amongst, effectively two of our projects, that's nothing to sneeze at. I mean, that's significant. And I don't think we've done a good enough job in terms of articulating that as because it really is a foundation. One of the things I look at these things, and one of the things, from an investor's perspective, because truly my background is as a professional investor in this industry. And one of the things that I always love is finding stories that have resources that are undervalued. And that's what we have. We've got resources that are undervalued. And on top of those, call it, that underpinning of gold in the ground, we've got, the potential to make significant new discoveries. So lots of upside. So to me, it's the perfect balance of what I would call value to underpin the market cap. And right now, based on the gold in the ground, and if we were just an average of our peers, we should be trading at, significantly higher multiple just based on the gold in the ground. And you tack on to that the discovery upside. To me, I would buy our story all day long, and in fact, I am in the market on the bid. So I mean, that's what I think about it. I think it's very undervalued, and really, it's our job to better communicate that.
Investors definitely like to see insider buying, so good to see you're in the market. When I look at the ounces that you have and your market cap, like I got a EV to ounce in the ground of like right around $15. And when you talk about peers, where are peers in a safe jurisdiction, like 45, 50, something like that?
In this market, probably 50, maybe higher. It just depends. I think, if inferred ounces obviously get are valued, less. So I think fair value would be, in my view, somewhere between $30 and $50 an ounce in the ground. And I still think that's cheap. It's in this jurisdiction in particular, being one of the top 10 mining jurisdictions as rated by the Fraser Institute, it's pretty tough to beat. As I say, I think we have some work to do to I guess educate people on not only the value opportunity, but also the tremendous exploration upside that we have in all three projects.
Yeah, first to put out a small resource, right? Because the market will value on that versus the unlimited potential upside of no resource.
Yeah, and that's a good point, Deb. And make no mistake, we're an exploration company. We want to find, make a new discovery or add considerably to the existing resources that are there. But we are not a resource story. We're an exploration story, and maybe that's the kind of what I would call the mix-up, or the miscommunication, or the whatever you want to call it. But again, when I look at companies like these, I love finding a company that's got existing resources because, it's value. Like it's raw, it's ore in the ground already identified, and it's it costs a lot of money in drilling and other expenditures to delineate those ounces, and we already have them, right? So we want to add to those ounces and make new discoveries. That's our next step.
I actually had a question from an audience participant just asking about drilling costs in Atlantic Canada. Are they higher than in other regions? I know, I believe there's a lot of overburden, things like that. Like, how do you compare the drilling costs to other regions, and how do you lower them?
Well, I think I'll let Dave answer that, but I think Atlantic Canada is one of the more inexpensive places from a drilling perspective, based on my experience internationally. Dave, what do we look at from an all-in assays in sort of drill costs right now? And obviously things have escalated. There's been some inflation, with the drill bit as well, because it's so active in the region.
Yeah, like our costs right now that we're seeing, across each of the jurisdictions that we work in are about $150, $160 per meter. That's all in. That includes the drilling contract costs, which are about $100 per meter, plus our own labor assays. But all in, it's about 150, 160 per meter. That really hasn't gone up a lot in the last, I'd say, 10 to 15 years. I seem to recall, 15 years ago budgeting 120, 130 a meter, all in for a project. So I still think substantial value, even though the market has gotten quite busy. I would never tell our contractors that, of course, but very good value. Still good drill rig and employment availability to staff those rigs.
So you aren't finding rig availability an issue? Because I've heard that with the amount of activity there, some people are struggling to find labor and rigs.
Yeah, that's true. It's certainly tightening up. I think that's where Magna Terra really benefits from its relationship with Anaconda. We're able to scale things up, if you will, and keep contractors busy throughout the year. I think it's one of the the positive benefits of that relationship and sharing an exploration and a management team is we can approach contractors as a group effectively and secure their services throughout the year.
Seems like a beneficial relationship. Last question. I think this is relevant also to the underlying value proposition, which is, should investors expect marketing spend to ramp up in the coming quarters? Are you expecting to get the word out a bit more about Magna Terra in the coming months?
Yes, absolutely. Obviously, I mentioned we run a relatively tight ship on the corporate basis, but we have spent, we have a marketing budget. We have established additional expenditures when warranted around news. And you can anticipate as we ramp up into, one, if not two drilling programs later this summer and into the fall and into 2022, that we'll ramp up our marketing spend, our exposure, not only through webinars and what have you, but we'll be active in the conference at the metals and mining conferences. We'll be marketing with some of the dealers that have taken an interest in the story. So it'll be focused on around news, and as we come out of what I would call the summer doldrums, we definitely plan on ramping up our activities in that front.
Right. Well, I think it's a really interesting story. Certainly a lot of value there. Anything that we didn't talk about today that you wanted to cover, Lou or Dave?
Off the top of my head, no. I mean, I just really appreciate the opportunity, Deb, to get out in front of your audience and some of our existing and interested followers. I think any opportunity we have to tell the story and explain why we think it's excellent investment here at this point is a good opportunity for us.
Yeah, well, from like a sheer valuation perspective, it doesn't make sense where you're trading. So I think it's a really interesting opportunity. And yeah, I'm always happy to see you. Nice to see you too, Dave. Thanks for taking
likewise, Deb. Thanks.
If anyone else has any questions, feel free to reach out to me and I can get those answered. And thanks for participating, everyone.